All right, so thank you for coming today. We're going to talk about our 3 homeownership assistance programs. So today's presentation is going to help your organization with submitting 2 applications for our homeownership assistance programs. And please note that this is not your home buyer's application, but your institution's annual application or renewal, if you will, to be able to offer the programs. Today we're going to train on the application requirements as well as some high-level information. And then all interested in potential home buyers, they shouldn't directly contact us at the Federal Home Loan Bank. They should contact an approved member of the Federal Home Loan Bank of Boston, and this is because we do not work directly with home buyers due to our wholesale environment. So just want to put a plug as we do get a lot of inquiries directly from buyers. So this training is not for home buyers. It's really for the member institutions that are going to be working directly with that potential grant recipient. All right, so we have 3 homeownership programs. I like to call it our suite. And these homeownership grants are offered to members of the Federal Home Loan Bank. And just to do the rundown top to bottom, the Equity Builder program, or what we like to call as EBP, it's our oldest program that assists households with incomes up to 80% of the HUD area median income. And then Housing Our Workforce, also known as HOW, is our second program for households earning above that 80% and no greater than 120. And lastly, Lift Up Homeownership, or LUH, is our most recent program, and it is for people of color that earn no greater than 120% per household. And all 3 of our programs provide assistance for down payment and closing costs. So just a brief highlight on our program's success through the total households that each grant program has served since their inception. And we continue to serve New England throughout our partnerships with our approved banks and credit unions, which is people from your organization. We also refer to financial institutions like yourselves as members because we are cooperatively owned by our shareholders who are members of the Federal Home Loan Bank of Boston. So just to put a plug in that too, because a lot of our materials might reference a member. So that is a bank or a credit union. I want to highlight 3 critical areas about our programs compared to others that are in the residential lending market. These are forgivable grants, they're not loans, and there's a 5-year retention period. This means that there's no monthly P&I and they're forgivable when that 5-year period ends. Homeowners can refinance as many times as they would like during that time frame. And these programs are flexible because we don't look at FICO, we don't look at loan to value, nor do we perform asset tests. They're purely income-driven programs. The third key that enhances that affordability is our programs can be layered with other down payment assistance, and our grants will assume last lien position. We see a lot of people stacking other programs because we're not lien sensitive, which kind of separates us from some other ones that are probably out in your lending territory. So this is a comparison grid that was included in that notice of change that I did actually put in the handouts as well. I'm not going to go into every single detail, but I want to mention a few specifically pertaining to today's presentation. We will be covering this in more detail in our enrollment training, but given we're talking about your annual application period, the main difference is the income eligibility limits, as we highlighted in that first slide with the suite of programs. The other thing is that Lift Up, because it is income-based and people-based, There is an extra due diligence of having a self-certification, which we do cover in our enrollment training. And then the other differences I want to highlight next would be the grants per household, which do vary between each program. They're also subject to change every year. So for this year, the Equity Builder program and the Housing Our Workforce, the maximum grant is $25,000. And then the Lift Up Homeownership is a maximum of $50,000. We say up to, just depending on the funding availability, or maybe a customer doesn't need the full grant amount. You know, you can slice and dice the grants to your liking. And then the next item would be the maximum member cap. So the member caps are limits that any institution can reserve, and they do vary. This doesn't mean that you automatically receive that full maximum allotment, because our funds are on a first come, first served basis. And then this year, we're actually implementing a graduated member cap for EBP and HOW due to the high demand of these programs. So this means in the beginning, when we first release money, the member limit will be $125,000, as you can see in that asterisk, and then it will gradually increase to $250,000. This is just to give as much of a fair shot and make it as equitable as possible, because we are throughout New England. It is on a first come, first serve, and it's not guaranteed. And just because our funding periods and allocations do vary every year. And then LUH does have a flat member maximum cap of $500,000. And this is because it is a higher grant amount, so to be thoughtful in the amount of customers that you can potentially reserve. So EBP and LUH is for first-time home buyers only. We do refer to the HUD standard definition. So if you have any complex scenarios and questions what constitutes a first-time home buyer, you can reach out. Just sharing this as a reference point if you're new to the programs. And HOW does not have to be a first-time home buyer. So how do you begin the application? This is how you're going to navigate through our community lending platform. And you do have to have a login through the community lending platform. Please don't share accounts, and we're going to actually give you a direct hyperlink in the next slide of how you would navigate to that. So if you go to our website, you'll see a login button at the top right. We do have two types of credentials. One's online banking and the other is community lending. You're going to want to select the community lending, and if you do have an account with us, you're able to retrieve your username and password. If you haven't used it in a while, if you're brand new, select first time user, and it'll walk you through those credentials. And we don't have, for those who are returning, we don't have a maximum limit of accounts. We do recommend, though, if you are a larger organization and you want to give a lot of people access within your institution, please reach out to myself or Paulette Bass if you would like to designate an administrator. That way you can approve those requests. And then here's just a snapshot of the step-by-step process. Most importantly, when you are in the community lending platform, you're going to select either EBP, HOW, or LUH. LUH is a separate application. EBP and HOW is one application, and that's because the Lift Up Homeownership program is tied to special purpose credit programs, so it does have some additional due diligence, which is why it remains to be a separate annual application. And you can select up to 4 contacts, and those persons would get all the notifications when there's money available, if there's any questions or concerns or updates on a reservation. If for some reason you need to update those over the program year, just reach out to me and we can make those enhancements. And then you're also going to go through the exercise of looking at our 2025 homebuyer education and counseling agencies. We do take our approved list and update it annually. This is just an exercise so you can appreciate what's out there in your footprint. You're not married to it, and you can deviate just as long as it's within our footprint and our list. We're going to talk today about member concessions for EBP and LUH. And then also finally in this application, before you validate and submit, you're going to select who's going to receive that agreement. And we'll touch on that later in today's presentation. So to highlight the member concession for EBP and LUH only, we don't require it for HOW. However, we have no restrictions if you want to keep it uniform for all three programs, depending on where your home buyers fall into our eligibility, if you will. And at time of application, we just want you to provide examples of a member concession. It's only an exercise to ensure that you understand what we constitute as an incentive, and you can always deviate from it any time. So some examples are lender credits. They can be either a lump sum or an individual fee. You can also waive or reduce fees. For example, if your underwriting fee is $400, but you're going to waive or reduce that, you just want to note those details. Some institutions do offer below market rates, and you would just need to give an example. Of course, we know that rates are fluctuating, so if you enter an example that says it's the standard rate is 6% and you're going to offer 5.25%, we know that those are not going to be the set rate, if you will, just depending on the given time of 2025. Something also to note, we don't state minimum thresholds because we have large banks and small credit unions, so you set that benchmark, so there really is no minimum. And for those who have utilized our programs before, I want to mention that we have removed the general expanded underwriting guidelines for the concession, and the last three bullets are what really encompass what expansion to an underwriting guideline would cover. So if you want to reduce and waive items that impact the buyer directly, such as mortgage insurance or removal of any loan level pricing adjustments, if you're going to make an exception to relax your FICO score, although we don't look at that, or your maximum debt to income ratio, those are what we deem to be expansion. And if you ever have questions on that, feel free to reach out to me. But we will need something later down the line at time of closing of what you're actually going to be providing to that customer directly. So homebuyer education and counseling, the curriculum should follow accepted industry standards regarding the purchase and the ownership, as well as the maintenance of the home. The reason why we publish an approved list is because they are either through CHAPA, HUD, or National Industry Standards of Home Ownership Education Counseling. And if you do use online education, we do allow that. We prefer that the home buyer works directly with one of the approved agencies on our list, because they are then given a special code that directs them to the online platform. And there's a lot of them out there, especially since the pandemic. A lot of people who are doing that hybrid or blended approach where the education's online and then they do that one-on-one counseling after the fact. And this is an example of a certificate that gets to that. So the online components that are acceptable for us are only through eHome America, Fannie Mae HomeView, Finally Home, Framework, or Home Track. We did add Fannie Mae HomeView as well as Finally Home and Home Track over the years, just because a lot of lenders, especially in housing finance agencies, are accepting those. So we want to make sure that we're being thoughtful if those are permissible. I just want to note that right now we do not accept MGIC or Freddie Mac. So if you have any questions specifically on that, please reach out to me. But we do also require the counseling, and it has to be done prior to or post closing. So as I mentioned before, this is an example of a certificate. The buyer went directly to Framework, and then they went to Alston Brighton CDC to get their counseling. And because they have to do the online modules, the agency that they go to mandates how their certificate is received. It's a pass or fail type of criteria through those modules. I do have a question about education. Hold on one second. Homeworks educators do a virtual class. Is that acceptable? So yes, if it's virtual, that's fine. We're fine with that. And I want to make sure you're specifically talking about the counseling. We don't say that it has to be face-to-face in person. We do know just because people's schedules, especially if they work an 8+ hour day, if they do it online or if it's over the phone or it's through a Zoom call or in person, we let that agency be thoughtful and accommodating to that. All right, so the application period dates. So the application for your institution to annually apply kicks off on February 3rd, and the deadline is February 28th at 3 p.m. So please don't wait till 2:59. Unfortunately, some people do live on the edge and like to do that, but just because if you're still in the process of entering this, the whole system will shut down right at 3 o'clock. So just give yourself time. That's why we give you the whole month of February. This process is super easy. It might even take you, if you're annually applying, 10 minutes. If you're new, maybe just add another 10 minutes just because you might be reading through the screens, but it's the easiest part of working with our programs. And then you're going to execute the annual agreement, which we'll cover today, and that is between March 1st and March 14th. And then that week of March 17th, you will get our award approval notice saying that you are able to offer these programs. We'll give you marketing materials and flyers that you can share on your social media or your local paper, and we do encourage that. And then the first day that you can enroll is April 1st. And when I say enroll, that means reserve grants for income eligible home buyers. We do have some webinars that are required, and it's noted in our announcement. So we recommend designating at least one person to attend the live, or we do record them so you can look at them at your leisure. The live, you get an opportunity to really ask the questions. We do try to capture as many as we can. We do give 2 dates. So enrollment is March 12th and March 25th, and then the disbursement training is April 17th and April 23rd. And each training session covers each step and any program changes. So enrollment is really geared toward a loan officer or somebody on the operations that's in underwriting or processing. And then the disbursement typically might be an underwriter, a post closer, maybe a QC or a loan shipper, because that is all about the closing documents and then the monitoring. And this hyperlink too, you can actually click and it will take you directly to the events page. If they run into any issues on that PDF, it's also on that notice of change. So the annual agreements, so annually the agreement has to be executed by your organization. It's basically the contract saying that you're going to abide by the policies and procedures of each of our homeownership programs. We do have a drop down that's directly in that community lending platform that lists who from your institution is an authorized signer. This is also covered in the notice of change section on the 4th page. So a person who is able to execute has to be designated under the EBP How parameters in the online banking platform. And this is just to have our designee. You don't need to access the online banking, but for individuals that want to be added or removed, you would have to contact your bank or credit union's user entitlement admin to be able to update that. And we do want who you select to be the firm person to get the Adobe sign on March 1st, because it will automatically go to them. And you can't forward it, and you want to just make sure you communicated that within your department just to make sure that person is available between March 1st and the 14th. So you have to execute it within 10 business days. Definitely check your spam, just because Adobe sign does go through sometimes in that Mimecast or whatever software that you have where we're all banks and credit unions. Also, we do have the option to wet sign in there too, if you are still in that wet sign environment. And I do send out an email letting people know that it's going out momentarily, just because there's a lot of phishing scams. So just to put a plug in that, because we all are operating in the same space where a lot of malware is predominant, as well as that phishing. Validate and submit. Can't say this enough to remember to validate and then submit, because at the last part, it will give you the option to print your application if you want to keep that for your records, but that doesn't mean that you have submitted. I do try to send out courtesy emails to letting people know if they have not submitted, just because we would never want you to miss out on that opportunity. But once you've gone through everything, you're going to get a thank you screen, and you'll get a confirmation email, so you will know that you submitted your organization's annual application for the EBP How. And just another reminder that Lift Up is a separate application. So if you are doing this, you're going to go in, do EBP How, and then you're going to go to Lift Up, and you're going to then complete the same process again through the community lending platform. This is just to highlight what the step-by-step process is. If you're new to the program, you can access this on our website, but this really just shows from start to finish how a grant is reserved, the time frame, the turnaround periods, and we do highlight this in our enrollment and disbursement training. So tips and tricks. Let's start with the do nots, because they aren't the fun ones, but they're important reminders. Please don't promise funds to a homebuyer before you receive the formal enrollment approval. And please only submit income eligible buyers to one of our programs. So you can't just reserve in one and then all of a sudden, if there's money available in the other programs, because their income eligibility, we had a lot of shifting, especially between EBP and How last year. And just really do your due diligence on looking at the manual underwriting and calculating the income to make sure you're applying for the correct program. Please don't send us more documentation than requested. We'll go over the income guidelines and what you need to submit and reserve money. And please don't tell us if income has changed. We do highlight this in a little more detail in our enrollment training. And then please do promote the programs for your benefit and helping the home buyers in need, and queue up home buyers before monies are released. So that way you can determine income eligibility. If you are new to our community lending platform, please watch our YouTube tutorials before submitting and reserving. I'll share that hyperlink in the resource on the last slide today, so that way If you have any questions on the application, even though if you're on today's training, we'll actually give you a step-by-step 5-minute clip of how do you do that. I do have a couple questions. When do you expect the legal documents to be ready and reviewed by lenders? So the 2025 notes and mortgages are presently on our website. The rest of the documents, such as the disclosure, our procedures and all that, we're still in the process of doing those and updating the website where the member application period does not kick off until February. And then if you're talking about having your organization review the lender, feel free to reach out to me offline if you have any questions or any specifics on that. Does a borrower need a P&S before they can reserve funds? So yes, they do need a fully executed purchase and sales agreement. We don't accept pre-approvals or TBD addresses, and we don't accept offers just because these funds are throughout New England and on a first come, first serve. So just to highlight some keys to success, we really recommend when you are working with first-time homebuyers, whether your organization works directly with the education and counseling, usually that's where a buyer will find out about our programs, which we do want you to promote the programs because if they're mentioned in here, we actually are publishing a list every year of the banks and credit unions throughout New England that offer it. So it's really great marketing for your organization. And then usually the buyer is working with that realtor to narrow down that location and then finding a bank or a credit union that knows about these programs and offers them. They're working with you hand in hand to do their first mortgage financing, and you are the ones who are going to work and submit the grant reservation on behalf of your customer where we're wholesale. And also this QR code here is a homebuyer flyer that's for realtors or first-time homebuyer educators, any other groups that would be working directly in the community grassroots environment. So feel free to be able to save that and distribute that. It is in a PDF document. We find that to be super helpful outside of the marketing materials that we provide you to say that you're offering the program. And then I just want to give an opportunity if anyone has any other questions. Just to clarify about the process and having the P&S to reserve money, pre-approval borrowers that do not need the funds. So when we talk about that they have to have a fully executed purchase and sales agreement, we do know when you're working with the realtor in the buyer-seller environment that sellers are obviously extremely competitive with the offers that they receive. We don't require it, but we do see a lot of lenders that mention that they can receive up to X amount of dollars for their grant, but it's contingent upon the reservation. So that is just a way to leverage and inform, especially the seller, just because first-time home buyers are really challenged in this housing market. But we want to make sure that the files are fully fleshed out because these are grants. One question is, this is a question, kind of more of a comment. There is a battle with affordability. Using this program, is there a substantial discount on the rate compared to market rates? So great question. So when we say that our programs can be utilized for down payment and closing cost assistance, closing costs do allow for up to 2 points if a buyer wants to reduce that interest rate. If you're pairing it with other housing finance agency products. I'll give an example just because we're in Massachusetts. So the MHP one mortgage, they do have below market rates. Whatever you have that can reduce that P&I for your buyer to increase that affordability will be beneficial. So, and we do have another program that is available. It's called our Mortgage Partnership Fund, the MPF program. So if you are a participating financial institution, we do have our own secondary market product. And feel free to reach out to me offline. I'm more than happy to circulate that. Jennifer Coles is actually the MPF manager, and that's outside of the grant programs that the Housing and Community Investment Team operates. But yes, that is definitely a challenge, which is why we're trying to be flexible with what our money can be utilized for. And then someone just wanted to know, so yes, this will be recorded and you can access it on the website once we have processed that. All right, so here's our team. If you ever have questions, feel free to reach out to any of us. As I mentioned, this hyperlink first actually is most important in my opinion for any technical assistance. If you have any questions on how to request the community lending account, how do you submit your application, submitting enrollments, going through the income screens, and how to request disbursement, the homeownership team has done a fantastic job of doing these quick hits. They're usually between 3 and 5 minutes on YouTube. So this should bring you to the suite of that. And then also, we're in the process of updating our website. The FAQs are updated and a lot of the text that's on the website, but stay tuned for the other documents such as the income guidelines, procedures, disclosure, and just make sure you purge yourself of any material from 2024 because we can't accept those documents. Everything should be up on the website no later than early March. So you can still use the reference points of the documents on the website. I just wouldn't recommend having a customer execute the disclosure. So Olivia Bork, she's our Vice President of the Housing Community Investment. If you ever have any questions from an operational standpoint or any challenges, if I'm not available, feel free to reach out to her. We have Sam Jurgens, he's an analyst that joined us last year. And we have Jack Newton and Kevin Ryan and Isabel Topagna, who are also on our team and have been with us. And then lastly, of course, I'm Caitlin. I manage all the programs. If you can never get a hold of me, especially during the high volumes, I like to say that our team is the best of the best. We are very member-centric, so everyone is extremely knowledgeable if you need immediate assistance. Great, and that concludes today's training. And actually, before I do have you sign off, I do have one poll I wanted to share. Let's see if I can do this. All right, so how much money is allocated to EBP? So feel free to weigh in. So I'm going to close the poll. So majority did get this correct. So we do, it's the percentage of earnings from the Federal Home Loan Bank. So it's not free from the government. It is a portion of our earnings. and then we allocate it toward the Equity Builder program, which is regulated by the Federal Housing Finance Agency. And then lastly, are HOW and LUH the same pool of money as EBP? I'll give it 30 more seconds. Don't be bashful. This is just a way, if you're especially new to the programs, to know how we receive our funding. All right, so I'm going to close this. So most people got this correct. So no, they're separate pools of money that are annually approved by our board of directors. So all three of the programs, although the time periods operate the same, each of the three programs, EBP, HOW, and LUH, they each have their own pool of money. Procedurally, we like to keep these in trend just because they are income eligibility based, but EBP is regulated by the Federal Housing Finance Agency, and HOW and LUH, those are voluntary programs that the Federal Home Loan Bank Boston has implemented to really serve the markets and needs of New England. So thank you all so much. Really appreciate your time that you listened in. And once the recording is available, check under the training tab of any of our 3 suite of programs. And thank you so much, and give you a little bit more time. And I look forward to working with you this year. Take care.